This is Alan Bush with the Daily Financial Forecast for Thursday, September 6th. Stock index futures putting in a very good performance, I would have to say, even though the trade tensions between the U.S. and China appear to be escalating. However, we did have several reports today that on balance came in a bit stronger than expected. But overall, it appears that the trade situation has dominated as of late, and yet the indices performing, I would have to say, very well. That would suggest that the longer-term trend is still higher. Also, by comparison, looking at the Chinese equity markets, they are still in bear market territory, while the U.S. equity markets are still performing extremely well. So that could be a sign of what might be happening with the global trade negotiations as far as who will fare better. Of course, we know that there are no winners in trade wars, and yet by comparison, the U.S. seems to be holding up a bit better. Moving over to the currencies, the dollar index under some pressure at a time where you would think that it would actually be firmer with the ongoing trade issues, and yet weakness in the dollar index. That would suggest that we may see some follow-through pressure today in the dollar. Also, other currencies higher, even the euro currency advancing, even though there was some negative news coming out of the eurozone. Also, there seems to be a more optimistic mood to the Brexit situation, that helping the British pound. Interest rate markets just mixed, maybe a little bit better. I'd have to say there's really no flight to quality buying coming in, and there has not been as of late, suggesting that the trend is lower for the interest rate futures markets, especially the bonds. It also appears that there is a very strong probability that the Fed will raise rates at the September 26th meeting. Almost 100%, and I have to stress the word almost. It also still looks like there is about a 69% probability of another rate hike in December. So still looks like pressure is going to be on the interest rate futures markets, especially at the long end, the 30-year bond futures, although this will, I believe, not be a straight down move. It'll most likely be more of a stair-step down situation, more of an erosion, but the trend still appears to be lower for the credit futures markets. So good trading, everyone. Once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.